So tomorrow we have jobs report. NFP comes out 8:30, hour before the market. All of these reports are going to be becoming more important, so the Fed can see, they need to crush demand. They also need to crush, employment. Believe it or not. I mean, actually, in his last testimony, I picked up these words. Powell said the jobs market is unsustainably hot. He used those two words in a sentence together. Unsustainably hot. So he doesn't care. So right now, the jobs unemployment is historically very low. That's why to have a recession when the jobs numbers are so low, there's a lot of aberrations that are going on, structural things that are going on that just don't add up. And so he's got room. Typically unemployment used to be around 5%. We used to think of that as more of like a full employment thing. So I don't think Jay Powell cares if, that thing, the unemployment doubles, to get inflation under control. So they're going to be monitoring that, and again, it's like kind of either way, it's probably bad news for the market. So if it comes out good, it's bad. And if it comes out bad, it's, bad, so we'll have to see. I don't really pay attention to those things. I'm not some, back end. I see that JP Morgan's now 113 bid. I look at how the markets respond to the information. So where we're at in the market right now is just at a funky stage. I'm just going to throw up this chart. Sometimes it's just interesting to look at charts on a different basis. This has a different color background. And so this is the weekly. I probably should have started off with the daily. So this is the weekly. And what I see in the big picture here is, this double top that's been driving it, this head and shoulders pattern. And basically cut through this neckline. So we have this big bad bear pattern that informs us that, the major secular move is down. Now, do we bounce back up to the trend line or what have you? Anything can happen. So tomorrow we got a report, and I'm looking at this area as being a potential trap in a certain way. So I don't know if let me use a different color. So here is a key reversal sitting in the midst of the last. So this is a weekly chart. Each one of these bars represents 1 week in time. And you can see the week before last, we made a new high and we kind of closed on the low of the week. So, you don't typically just take those out, so now we're a good ways up into this bar. And then today we may make a little bit more encroachment and then, may get the jobs report. But anywhere up here, I'm a little bit, reticent that it's going to get much higher. So I think, it's just a very dangerous area here. We're kind of between, resistance and support. You've got a little bit of a key reversal here that I think is going to be a little bit difficult to overcome. So that's what I'm seeing on the daily. So on the weekly, I see that, there's kind of a pocket of resistance coming in pretty quickly. So you got to be careful about being lured into a trap. On the daily, this is what I've been looking at. So
just before you get into the daily, what do you mean when you say a trap? What's a trap?
Well, I shouldn't have gotten out of that. So I guess I got to go back. Let me just, all right. So, yeah, I'm sorry. And you're right, Jonathan. I go a little bit too quickly. It's like I have these mental processes that I look at these things and I need to do a better job of. So the thing is, if this is a reversal, made a new high, close on the low, typically you don't overcome those, so here's a reversal. And then when you came up into this thing, right here, I viewed this as, an area to get short using that as a high, that there's a trap. Once you kind of get to, so right here, you had a reversal right here, made a new high, close on the low. Then this week we started going higher and revisiting that thing, but it's a trap up there. If you chase this high here, if you start getting long thinking, going higher, you're in for a world of hurt. So this is where it's a trap. You've got to see how something closes. So if this closed negatively, made a new high, close on the low, when you get up here, it looks, on the daily or the 15-minute chart, it looks all really sizzling. You got a double bottom here, and now we're going. But this is the trap where you get up into an area where it's reversed, like it has here. You get up into this and you start chasing it, thinking that's going to happen. And then all of a sudden it's down there. So we're very close to last week's high where it reversed. We're between, where we are now and, last week's high. So it could still today and tomorrow kind of get back up into this little area. But, you start chasing it at your peril, thinking it's going to do that. And, all of a sudden it's down here and you're wondering what happened. So, these key reversals, this is how I, view my risk and reward. That's why I always say, wait for the bar to close. When something closes at the high, we don't know how much higher it's going to go. Wait for the bar to close, see where, so now I made a new high, close on the low. So now in here, you can create this risk reward trade where this is the risk, you can get in here and take advantage of that. So, that's how I use these bars. I kind of assess where the risk is. Now, in a cluttered up area like this, it's a bit more random where prices can do anything. We can still kind of close like here this week and then, start going up here and then wait for something up here. So it's a bit more random in here. There's certain areas where it looks a little cleaner. Now you're kind of getting up into this boxed up, area here where, it's a little bit, this is a lot of clutter where it could still continue to go back and forth. It could, continue range bound for the next 3 weeks. And you just got to be careful up in certain areas. But, so here, on the weekly, I see the trap. But then on the daily, I went long a couple of days ago. I went all in. I bought some Dow calls, some QQQ calls. I bought Bob. I just went long based on what I thought was, there's this little collection area here. So you got this little bit of an inverted head and shoulders. And so when you started coming back down into here, and then a couple of days ago, you came back down into here, you don't just clear through this underbrush, right away. You don't just, go right through areas where there's like this little congestion here. You don't just come here and clear through this. It's got to do work. So this is what I'm seeing on the daily, there's a bit of support, but on the weekly, you're coming up into these headwinds. And this is why I have such a hard time trading. It's like, okay, you're long, but how long do you want to, stay long for before the big trap kicks in? So that's the difficulty in this market, is that you always got to be aware of this big bad bear out there, this big long-term thing. But you may, get a little move on Zoom from 108 to 125 in this little, so when the market's benign, when it kind of goes sideways, it gives certain stocks like Zoom a little room to, to get a little bit of a headwind. And so this is the constant push-pull in this environment. It's been extraordinarily difficult. And so my mindset is I'm just looking for pieces, so when I see a key reversal like this, I'm going to say, okay, this market's going to be benign for the next couple of days. It's going to give BABA a lift, Zoom a lift. I'm going to take a nibble at these things, but then I'm gone like the wind.
So you can see, 45 is 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market's just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.